What's up, everybody? So episode 54, we have it Tuesday. Let's explain stuff real quick. I'm here to facilitate your learning. You're here because you want to better or improve your trading skills, okay? I'm here to teach those skills and improve upon your efficiency to make you a more efficient trader. You're here because you understand the value that I'm bringing. But without me, there would be no you. Without you, there would be no me. So we got to face facts. And now we're here to accomplish our goals, all right? So to give you a little more background, I've been trading in the market since 1991. I work for 2 hedge funds. I work for about 4 or 5 institutions, some of the better known ones. I see demand, I track volume, and I generally see patterns and show you these patterns. All right, so if you want to learn and you're here to learn, please, I challenge you to watch 6 episodes. 6 episodes to see if you can actually be a better trader, all right? I'm going to give you the episodes to watch. It's up to you to watch them, okay? Episode 3, I talk about options. Episode 8 was a good episode. Again, you'll see the progression, okay? Episode 14, you're in a shitty stock position that's down 40%, 50%. You want to get out, but you don't want to take the loss. How do you salvage that position? Episode 14, okay? Episode 37, how to average down with options. And I'm sure I'm going to have to answer a bunch of those questions today. But I speak about if your option only has 7 or fewer days till expiration, then you're choosing an option that's out like a month or 2, okay? If you choose a different strike, a different expiration, all right, you go out a few months, whatever it is, you double the amount of money of your initial investment. So use for an example, Tiger. Say I put 5,000 into Tiger options for July 16th. If I want to average down, okay, I would buy the same options if they're in the money. If they're not in the money, like they weren't, I went today and I bought some $20 strikes. If I wanted to average down differently, I could go out till like September and buy the $25 strikes. There's a way to average down. You spend double the amount of money if you're changing the strike or the expiration. Other than that, you're using the 25% rule, which means if I spend $1,000 on options and it goes down 40% and I can still average down using the same option date, I'm going to spend the same 1,000. 1,000 first position, 1,000 second position. Same with stocks. I entered into 4 stocks today. I gave an alert to my platform members. I'm going to tell you those stocks in a couple of minutes when we get up to that. All right. So what do? Let's get past that. All right. Please, if you're watching this, please hit the like button. Everything YouTube does is algorithms. Please share the live stream. I know we all had, or some of us had, a difficult day in the market. Understand, we zoom out. We can't focus on today or focus what happened on Friday or Thursday. Understand, before that, what were 9 straight weeks that are hot. So we prepare for days like today. We prepare for days like Friday, okay? When the market tanks, we know exactly what to do. We secure the best entries. I shared a couple of those today. All right, so I'm going to talk about some specific stocks. I'm going to ask you to pay it forward and share this with someone. And I'll talk about some positions I entered into. And then we'll go to some slides real quick. But stocks are most important because you care what's going on in the market. You care about specific stocks. So I was talking to a private lesson member today, 349 Trading, and he mentioned MITK, all right? It's a materials play. It's a building play, like Toll Brothers or something to that extent. We spoke about it at $19. It's $19.18. But if you look at the chart, it looks really nice. MITK. I have no position. No position there right now. Also, I like CrowdStrike. Great chart. No position there. Let's talk about stocks that I actually own or shorted today or went long on today. All right, Edit, the gene editing company. I said it could go down. It went down like 8%. I sold my options. They went down even further. It went down 13%. I could have made an extra 150%. The point is, I didn't. I secured profit. All right. I used up one of my trades, one of my 3-day trades or 4-day trades, whatever you have now. I entered a new options challenge this morning, meaning I put $2,500 into a small Robinhood account. As soon as I bought my option this morning, it went down to what, 2,000. Then it shot up to 3,500. The point was, I was only in one option position at a time. I used my 25% rule. So for anybody, whatever amount of money I had, 2,500, I took a quarter of that, $600. I entered into my first position. I made 100% profit. I exited out. I used a day trade. I wish I hadn't because it went up 250% today. All right. What did I enter into? I entered into DDD because I saw the dip, and I'll show you the slide. I think I have the slide. And then it rebounded, and of course it dipped further later in the day. But DDD, I believe there's a strong rebound, and I'm going to tell you why there. Because with DDD, it also trades around 2 other stocks that are extremely similar. SSYS, which was up 3.5% today and is up 0.75% after hours, right? And then Proto Labs, PRLB, which was up 2.25% today. So DDD trades right along those. It's like if they're all airplane stocks, but they're not. They're all 3D printing stocks. So the only thing is that I've noticed is DDD actually had large scale orders, which meant institutions were buying in that stock. They weren't buying in the other two. So the other two had lighter volume. Maybe that's a thing. But I'm holding my DDD. What stocks did I buy into today? I mentioned it pre-market that I was mentioning 4 stocks, and I wasn't sure I was going to enter into them today until I got the best price. I said, if I don't enter today, I might enter tomorrow. If not, I'll look to get the best price the next day. Point was, I wanted the biggest dip. So when the market threw up on itself around noon, I was like, okay, I'm going shopping. These are stock only positions. I bought 100 shares each. Now, if the stock goes down 10%, I buy another 100 shares. All right. That's my 10% rule. When you have stock, it goes down 10%. You buy the second position. I'm buying 100 shares. When the stock's under $10, I buy 1,000 shares per time. But when the stock's $18 to like $300, I buy 100 shares. It just makes more sense. So the first stock was SolarWinds. $17.19. I think I bought under, $17.04. So it's up 15 cents. Not a hell of a ride, but I like SolarWinds, okay? Again, 100 shares, that's it. Cryoport, CYRX, okay? CYRX. I'll say it slow. Now, Cryoport was down to $59 and change. That's when I bought my 100 shares. It's over $61 now. So that's $1.50. Again, it's not killer, but 2.5% is 2.5%, and it's moving in the right direction. When my price targets have 24 or 25% profit, guess what? We're 1/10 of the way there. All right. So that's how we make a gain. All right. What else? Apps, APPS, Digital Turbine got beat up yesterday. Or what was it? Friday. Got beat up Friday. I think it lost like 12, 13, 14%. Huge volume. So I entered into that again when it dipped hardest. It was negative at the time. It went up $1.64%. So again, I gained probably 2% on my trade. That is something when you're just looking to make 20 or 25% in a stock play, not an option. So it's not time sensitive. And you make 2% or 1/10 of what you're looking for your profit. Again, anytime you enter a position, have your exit strategy, have a price target. If you don't have a price target, you're bag holding. And the last stock was one of my favorites, Roblox, okay? RBLX. It closed up 1% or 0.9%. Again, I mentioned it when it was like $1 cheaper, 86 and change. It's closing at 87. So again, those are the 4 stocks I entered into. SolarWinds, SWI, CYRX, Cryoport, Digital Turbine, which is APBS, an old friend of ours, and Roblox. Oh, I also entered into an option, eBay, because eBay's chart looks strong as can be. So when eBay was sitting, let me just see where eBay is, because it was right above whatever dollar it is at. It was at something 06. So let's just find that so I can be as accurate as possible. All right, so 69. I guess that's where it was, 69.06, right? Yeah. Or maybe, yeah, it wasn't 68.06. So eBay, $69. And someone said to me, what's your exit strategy with these options? I say, I sell my options. My options expire Friday. So I expect eBay to hit $71 by Friday, which means tomorrow, Wednesday, Thursday, or Friday. Right now, it's $69. So that's basically a $2 increase or about 3.3%. All right. I'm going to make about 35% on that trade. Again, know your entries. Know what you're going to exit and what you expect from the stock. Make sure it makes sense. As soon as it does, know exactly how to secure your profit. And when you secure your profit, you take your money to the side and you enter another trade, whether it be tomorrow or the next day. You really don't have to enter trades every day. Let's talk about this lesson real quick. So here's a lesson about your portfolio, okay? Doesn't matter the size of your portfolio, but let's just assume you have $25,000, okay? I want 1/10 of that to be in a trade. So if I'm telling you to put $2,500 into an options position, that means you're buying at 25% increments. So your first increment should be like $600. Means you buy 1 or 2 contracts because we're buying in the money. So you buy 1 or 2 contracts. If it goes down 40% and you can average down because you have at least 8 days, you double that. Then you have 4 contracts more. So now you have 6. The point is, if you double and double, right, then you're in for $2,500. 600 plus 600 plus 1,200, $2,400. Meaning if your account is 25,000, you're in for less than 10% of your account. I don't want people putting their whole accounts into certain positions, whatever it is, good or bad. If it works out, you're like, I'm a genius. If it goes bad, you're like, I'm the biggest idiot in the world. Let me tell you what happens when you put too big a percentage into one position. You're just relying on that. All you are is being focused and watching. And if it's a stock, I'm going to mention a few stocks right now. If it's a Chinese stock, and I mentioned this pre-market, I mentioned 2 things pre-market. Number one, that I thought gene editing companies were going down today. All right, that's Edit, EDIT, which I think went down like 13%. Yes, I sold a little too soon. The other one was NLTA, right? Or NTLA, which also went down. I think it went down like 8%. I think it was down like 10%. And the last one was CRISPR, which dropped 5%, and they're all down a little after hours. Okay. Now here was my tracker for the Chinese stocks. Okay. There's a Chinese fund, KWEB. You guys can write this stuff down. That's why I mentioned it. KWEB. So KWEB. Okay. It tracks Chinese internet stocks. So it was off over 5% today. It's up after hours about 0.6%, which tells you there should be a bit of a bounce. That's what I'm looking for, okay? Now, again, when I mentioned how strong I thought about Tiger, okay, because there are trolls out there, it wasn't because I was trying to suck everybody in like Jim Cramer did with DIDI, right? It went down. The Chinese government said this. No, it's a counter effect. China is talking about they want to take over Taiwan again or incorporate Taiwan into the Chinese system. They're talking about more restrictions on Hong Kong and data breaches where they basically track people's information, which is no good for Futu. All right, which is just like Tiger. Now, keep in mind, Futu was off an extra $8 today. It made about 4% back on the bounce. Tiger did not. All right, Futu did. Futu was down like 14%, finished down like 9%. Tiger was down like 15%. I think it finished down 15%. So I'm expecting a bit of bounce there. But I tweeted pre-market that there were certain companies that were getting hit, right? Xpeng, Neo, Billy, BILI, PDD, and Baidu. All off 4%, 5%, 9%. Neo and Xpeng, I mean, electric vehicle companies, so they came back strong, but they were off 4.5%, 5%. Same with Li Auto, right? It finished up 2.8%. Now that is strong. So the EVs is strong. Now here's the thing that gets me, right? There are politicians that are investing in certain option plays. You guys think you're new to options? Politicians are investing in options. You want to guess what Pelosi had? Pelosi had Amazon. So let's talk about the government canceling their cloud deal with Microsoft, and instead taking the cloud deal and giving half of it to Amazon. It's a $10 billion deal, and half of it to Microsoft. What happened to Amazon? I saw some people's results, 600% in 2 days, 374% yesterday, and 314% today. So, I mean, come on. The government, it's a little corrupt. Now they have a lot of interest in electric vehicle stocks. So I'm good there. I mean, we saw XL move a little today. And again, anytime XL moves up, people sell off into it. Neo and Xpeng are a little stronger. Lee is stronger. CCIV is stronger. Workhorse got beaten up and then is showing a little bit of recovery. And I think Fisker even turned positive. Okay? Yes, one of my old friends, Fisker. Please. So let's see what else we got going on. A couple other stocks. I almost entered into materials play today. NUE. I did not. It's beaten up 4% today. It looks like it could go down. So here's the thing about the market right now. And here's what I want to get going. As the inflation rate stays down and inflation is not really a fear anymore, right? In fact, Kathy Woods is talking about deflation, meaning things are costing less because people save so much money during this hardship, during this pandemic, that things aren't as expensive. She's talking about deflation. She's talking about gas and oil pricing going down and things of that nature. But inflation, it's staying the 10 years at 1.35, which makes it less expensive to invest in our tech companies, in our tech growth companies. That's where people want to be. They don't want to be in the Dow. So when we talk about averaging down on like Delta or Carnival or Wynn, say you follow Jim Cramer and you're in Wynn casinos, or Las Vegas Sands, one of my favorites when we talk about casinos. And no, I have no position there. But if the Dow continues to get beaten up, these stocks will continue to go lower, unfortunately. Now, I do think there's a bottom. I know Carnival's at like 25. So somebody said to me, hey, I thought you liked Carnival. I thought you liked Carnival. I do. My Carnival options expire in October and January. So anytime I average down, anytime Carnival goes down 3% or Delta goes down 3% or JetBlue, I think went down 3%, I buy January options. I buy December call options, all call options, rather than buying stock. Remember, we buy stocks when it dips. So all I'm doing is averaging out using options instead of saying I know Delta is going to rebound by July 9th or by July 16th, which I don't know. As long as the Dow keeps throwing up on itself. Now, let's remember, it was off 350 points and it went down like 220 points. So yes, tomorrow could easily give back 150 points. Now, I'm hoping we saw a bit of a recovery and they're saying, no, some of these stocks were just so puked on that they're going to go up. All right. So let me see if I can share a couple more stocks with you guys. Again, if you missed this, go back, rewind it, Write down the stocks. Everybody says, how does love make so much money? How does love do so well? Okay. I give a watch list out. I'm like, hey, I like this stock, this stock, this stock. She waits for my stock to go down. If I'm in options, 20%, 40%, and then she buys it. And then if it goes down more, she averages down the right way. So when it pops back and I make 11%, she's making like 61%. If you don't know how to average down with options, episode 37. If you don't know how to get max value and you're always picking the wrong exit strategy for options, watch episode 42, okay? I give you my secret. I'm going to use it today. I use my spreadsheet. So what am I going to do on those edit puts that I sold today? And again, I made like 95% or maybe 98%. I could have made 274%. So what am I going to figure out? My max profit is going to say 174% because that's what I missed out on. So anytime I'm in a more speculative play like that, I'm going to go back and look at my spreadsheet and look at my max profit column, episode 42. And then I'm going to say, when I'm more speculative, I missed by 174, 142, 100. So instead of making 100% on the more speculative plays, I'm going to try and make 250. If I tried to make 250%, I would have done that today. And then I would have saved myself on a little DDD action. Again, so let me explain what I did with DDD. When I bought DDD, I had options that were 63 cents each at the close of business yesterday. They opened up today. DDD sunk. My options became worth 25 cents. What did I do? I doubled down, okay? So then my average became about 44 cents. What did I do when it hit 40? I sold half of my position because I limited my loss. Then what happened? Because I'm not the smartest person in the world. It went up to 80 cents per contract. So I had 63. I bought more at 25. I sold half at 40 and it went up to 80 and then it went to 70 and now it's back at 33 or 35 or something to that extent. Yes, I still like DDD and I still like it this week. And if you missed it before, I gave you two other stocks that are also 3D printing companies that should move with DDD. All right, so let's quit with the stocks. I gave you guys enough stocks to add to your watch list. Let's go into some slides. I'm going to share how I use my stock strategies in other aspects, okay? So please. All right, Bitcoin. First off, when I bought into Bitcoin over the weekend at 33,700, I told you guys, always have an exit strategy. I was looking for 5%. It didn't happen. Didn't happen yet. It went to 35. It didn't go to 35,400. I am still holding. As soon as it crosses 35,400, I am out with a 5% gain. Now, I still am bullish Bitcoin. I still am bullish Ethereum. Okay, Ethereum, I like to hit 4,000, 4,500, maybe 5,000 by the end of the year. Okay, which means it's going to double. All right, next slide, please. I'm going to go through these slides pretty quickly. I think I have a bunch of them. Oh, yeah. I don't know if you guys can see this, but somebody mentioned me in the same sentence as Charlie Zip Trader. So I make fun of these guys and stuff like that. Chris Sane, I will still make fun of. I don't really believe in him. Charlie Zip Trader, guy knows what he's talking about. There are other people, Humble Trader. They all know what they're talking about. I am honored to be mentioned that somebody actually likes me along with Trade Trades. I think he has like 15,000 followers. So I appreciate that. Next slide. It's all public word of mouth. Okay, this is what I posted to my private Twitter. Follow the rules because you don't want to blow up your account. I give you specific rules and someone says, Matt, you break the rules. Yes, but you're not supposed to break the rules. My rules are there for your safety, for risk management. All right, next slide, please. All right, here's how I get and use my stocks in a different way to gambling, okay? We always look for the dip. So here it is. Vegas was putting the Suns at minus 170 to win the entire series. I think they're going to win game one, definitely, okay? Which would put the Milwaukee Bucks at plus 260 or plus 275. So I'm hoping Phoenix wins game one, okay? And then I'm going to take the Bucks to win the series at good odds. It's all about value. Next slide, please. I'm going to show you how I actually use this. All right, just like stocks, I don't remember this one. Next one, please. All right, here. Oh, yeah, quick hedge. Right. I bet on the Dodgers when they were down, so I was getting good value. And then when the Dodgers tied it up, I took the Marlins on the other side. So if the Dodgers won, I would have had $2,100 profit. If the Marlins won, I think I made $90. The point is you hedge just like stocks. Stock goes up, you buy puts. Stock goes down, you buy calls. You can hedge or play both sides. I was a winning trade or winning bet. It's the same way with trading. All right, next slide, please. I just want to share with you guys. All right, so this is pre-market. I was showing you all these Chinese companies that were willing to explode. I mean, you could see they weren't even down that much pre-market, and then you add another 10%. So there was a way to save money, and if you were going to average down, you wouldn't do it at the market open. We wait till at least 10:30, and we look for the biggest dips to average down. You don't have to average down every day. If I tell you the Dow is going down tomorrow or the next day, and you want to average down with Carnival or Delta or whatever Dow stock you're playing, you might be able to wait another day or two. All right, next slide, please. All right, Tesla also pre-market. I showed you guys there's been heavy selling in Tesla 4 straight days. All right. and you can see the sell-off. I look at the 1 month chart. Now, what I'm telling you guys is Tesla can fall. What happened to Tesla today? I did not jump in because Tesla is very dangerous. If you jump in pre-market or before there's a pattern, and when I say pre-market, I mean at market open, right? And you put in a bid and you're wrong, all of a sudden you could lose like 40%, 50%. You average down the wrong way. Then you're down like 90%. Tesla is very dangerous. So whereas I wanted to buy puts and I shared the information on Tesla puts, I did not enter because it happened too quick. I think it dropped to like at 9:45. I think it just fell, and it fell even more. So next slide, please. This is the gene editing warning. Again, pre-market, I just tell you guys what I'm seeing. Again, they were down 2%, 3%, but that's nothing. When they drop 13, 14%, you can make the extra 10%, even if you enter some options plays, which I did. I made 100%. No, I didn't make 250 or 274 like I could have. And I know a lot of people are short the middle one anyway. And I know a lot of people like CRISPR. Again, I just think they're a little overvalued. They went too fast. They passed phase one. The middle company passed phase one, right? Phase one means people took your test or took your treatment and they didn't die. They didn't get sick. So 6 people took phase one and they didn't get sick. It doesn't mean the stock should go from 100 to 200, especially when they did an offering. All right, next slide. I've got no position in any of those 3. I sold out. Oh, here was my alert. Oh, so I didn't enter these stocks pre-market, but I was thinking about it. Again, these are more Dow-related stocks. At least the first 2 are. Raytheon and Lockheed Martin, okay? They're like more defensive plays. I like them, but I'm looking for the biggest dip. I know Lockheed went down big time, and I missed out on that opportunity. I was looking at other stuff. All right, next slide, please. Always have a plan. Okay, this is my Robinhood challenge. So again, next slide. I start with $2,500. Now understand, my Robinhood challenge is not like mimic me, copy my picks. I don't tell anybody to do that. What I'm showing you is we take a small account, and I'm going to grow this small account within like 5 weeks to 25,000. Okay, so I bought in at 2,500. It went down to like 1,900. Then it popped up to 3,500. I sold one of my positions. All right, I still have 2 more, and I said you make decisions. Even though I think they're going to go down later today, I think I'll be better off in the long run, and I don't want to use my day trades. So unfortunately, I was wrong. I would have rather had 3,500 rather than I think it's at like 2,200 now, which means I'm down 300. Yes, transparency. I'll admit when I'm down, but I'm going to show it off in 5 weeks and less. When I'm up, I'm going to update every day. All right, next slide, please. And we're going to get to a lot of questions today. So here was my first position. Again, 2 contracts, $620, which was 25% of my money, okay? If I was wrong, I was limiting my downside. If I was correct, which I was, I made $600. All right, next slide, please. And yes, I could have made like $1,500. This same option went as high as like $8. I'm upset at myself. Next slide. But it's all about taking profit. Okay, now I've been talking about DDD. And again, DDD's competitors in the market did very well today, up 2%, up 1.96%. DDD struggled out of the gate. I mentioned when it dipped, my options, which were 63 cents, became worth 25 cents. What did I do? I doubled down. I bought double the position. Then when it rebounded on the way up, I sold half my position at 40 cents. My average was like 43. So I did accept a small loss. Then it spiked as high as 80 cents. And I think it went back to like 33 cents. Point is, I didn't sell at the top, but I sold what I was comfortable with. I entered into a double position. Heavy. Okay. I still think DDD is going up. So I'm holding on to a big number of contracts. All right. Next slide, please. All right, DDD. Yeah, you know I love this stock. So I was just, again, I tweeted, we all prepare in advance. It's all about planning ahead. So if you like the stock like me and you're like, oh, I'm looking at this contract and it's $2, I talk about getting something on sale. So you could have bid $1.20. You could have bid 40% off, and I bet you would have ended up with some contracts. Where would you be right now? You'd probably be up about 16 or 17%. It's all about securing the best entry. As far as what you exit, I'll share this one later. Next slide, please. When you exit and you're not in a struggle. Okay, here was my Tiger call. I think these are actually up like 10% as well. I put in a bid of $2.55. Now on Tiger, I went down to $20. Why? Because I want in or at the money. So this was my new challenge, okay? It has nothing to do with my other positions. Someone's going to say, hey, I thought he had $30 calls. I thought he had $25 calls. Yes, originally I bought $30 calls out of the money. Now who suffers? Me, because my option rule says in or at the money. So I really should have bought $25 calls and averaged down. But now that I have the opportunity today to throw new money at it, I wanted to do what was best for me. And what was best for my return was the $20 calls because they're in the money. So say Tiger spikes. Say China figures it out a little over the next 2 days and Tiger spikes 12, 14%. Who's going to be making money? These damn Tiger calls. Who's also going to be okay? The $25 calls should be okay. We have till July 16th. Okay. It's always good when you have at least 7 or 8 trading days. We have 8 trading days left. So that's just enough. If you wanted to average down and you didn't want to take July 16th because you thought they were too risky, you would double the amount. So I would take $2,040 and I would buy like August options. Same $20. All right. That's what you do. You double the amount of money. If you're changing the strike or changing the date, you double the amount of money. If your initial investment is $5,000, I don't care that it's worth $2,500 now. Your initial investment was $5,000. It's worth $2,500 now. You double your $5,000. You make it $10,000. Okay. So whatever option is, if you're changing the strike, if you're changing the expiration date, you go out, right? You double the amount of money. All right. Next slide, please. I don't have too many more slides. I'm probably killing you guys. All right. So I was just showing you guys entry point. As soon as I bought these Tiger options, boom, they picked up. Of course, they went down. But the point is, if you're day trading, you're in, you're out. What? I think these were up like 17%. Then they went negative, and then they finished the day probably like positive 12 or 14%. All right, next slide, please. These are all positions I like. And new people, if you missed it, go back, listen to this full live stream. I talk about at least 12 stocks. I don't even have positions in some of them. So I'm just sharing information. Now, this was new people, not all alerts every day. Okay, so here's the thing. For my platform, I don't want to give out alerts every day. I don't say this stock today, this stock tomorrow, what's Wednesday, this stock Wednesday, Thursday. I want my alerts to be as profitable as possible. Meaning, I want to be like 90%. All right. Right now, my alerts, I think, are 82%. I think I have like 8 open positions. I think half of them are green, half of them are red. I did not average down on STX. Why? Because I'm not sure I have enough time on STX. It's a struggling stock. I mentioned this when we bought into STX. It's a rebound play. Remember, it had sold off 13 days in a row when we got into it. 13 days in a row. So it's not going to flip the switch and just turn around. Now, the good thing is AMD, Micron, NVIDIA, they're all going higher. They're all similar stocks. So yes, I expect STX to rebound. But let's say my options expire on Friday, my July 9th. I'm not going to go out to July 16th. I will go out to like July 30th if there are options, or even August, and I will throw double the amount of money. So if I have $18,000 into my initial position, let's say it's worth $12,000 now, but 18 originally, I'm going to take $36,000 and use August options. That way, let's say it just rebounds a little and I get a little percent here, but the real move happens to like $95 and it happens July 23rd. Boom, my August options are going to crush it. Yes, I really like STS because it has limited downside. If you look at the chart, STX, limited downside, great looking upside potential. So yeah, new people, I don't have a crystal ball. If I did, I would totally give alerts every day. Other than that, just we're here. I'm here to teach. That's here. I'm here to facilitate. And yes, I give you alerts as well. And my alerts are crushing it. So even though we have 3 red days in a row, right? 3 red days, we're all beaten up, but there is a theory to it. There is a madness to how we average down and what we look for. Instead of 100% when we're in trouble, we might look for like 15%. 20%. We're looking to get out of the trade. We're down 60%. We average down. Now we're down 30%. We average down again. So now we're down 27%. When it pops and we're out at plus 11%, boom, there's a big change rather than not doing anything. I'll give you one example real quick. You buy one option. This is for everybody. One option at $4, okay? The option goes down to $250. So it's down about 43%. You double down. So you spent $400. Now you're spending 2 options at $250 each, $500. Now you're in for $900. 3 options, $900. You're in for $3. You set your ask price for 33%. So the spikes back up to $4. The options back to $4 where you initial purchased it. Now you're out with $900 and you just made 33%. It went from your average $3 to $4. That's how you average down. That's why I say my rules teach you to average down at 40 to 50%. Again, $4 for your first option. It goes down to $250. You buy 2 more. So you're in for $900 altogether. You have 3 contracts. It spikes back up to $4. If you just have that one contract, you're exactly even. You're exactly flat. If not, if you average down, you now have 3 contracts. You sold them at 4. So you just made 33% on $900. You made $300 and you're out at $4. You're out. So that's why averaging down is so important. So if you don't understand averaging down or even max profit, please watch my episodes. I'm going to tell you one more time. 3, 14, 37, 42. That's it. 3, 14, 8's good as well. 37, 42. Please give a thumbs up here. We're going to talk about your picks now and what stocks you guys are having trouble with or you want help with. You talk about a stock, a position. You'll ask me what I think, and I'll give you the best answer, best of my ability. All right, so let's get this started, please. Yes. So Tiger, Ebon, really hurting. Yes. Chinese, you hope they spike before the 16. So here's what's going to happen. Something's going to happen. There's going to be a resolution, okay? China's either going to make it worse for these companies and impose like martial law on these companies and almost take ownership of the data, or they're going to have to lighten up and understand that people aren't going to want to invest in these Chinese companies if they're so beaten up. Like what China said is they told Didi to delay their IPO, to delay it. Delay your IPO. That's what they said to Didi. And Didi said like this to the Chinese government, went ahead with their IPO. Jim Cramer said, I love it. It's the best company ever. Throw all your money in there. And then what happened? It dropped, 20% today? 22%? He's an idiot. All right, let's go to our next comment. I know you guys have questions. All right, STX hurting. Yes, so XTX, if you look at the other chip makers, AMD, NVIDIA, Micron, right? They all look somewhat decent. All right, so it's STX. I mentioned it before. It's a rebound play. So we entered into it when there were 13 straight sell-off days. So yes, it's going to rebound. It needs to have time. So if you have July 9th options, you need to go out to August. July 16th, I would still hold. I'm not really sure if I'm averaging down with that. If I do, I'm going to average down in the money, which would be $85 calls, okay? If I take July 16 options, $85 calls, I want in the money. I do expect STX to pop past 90, and when it goes to 90, I expect $95. I mean, look at the chart. It doesn't hang out too low, and it doesn't double dip, meaning it doesn't dip like it did without a rebound. Every time it's ever dipped, STX, it rebounds higher, which is why I'm so confident. I love charts. I love patterns. And I see the demand. The selling is gone. If this stock, if they were to continue to sell off, it would be under 80 by now. It hasn't been. EBON's been tough. Yeah, I mean, EBON, same thing. Every time it spikes at all, there's so much animosity towards EBON that they just sell it off. So yeah, unfortunately, I wouldn't average down with that. If I was going to average down with EBON options, I would go out to January so that all this shit blows over with China. All right, who cares what they're going to do with crypto? Crypto's still going to go up. Right. So that platform, which I think they're like Singapore related or something like that, I expect it to do better. All right. Next question, please. All right. Yeah. DAL, same thing. Could sell off tomorrow. Yes. So that's the thing. It would be a great day if the Dow went up tomorrow and tech went up tomorrow. I mean, it would just be wonderful. It would help you realize how averaging down is so great. Because remember, we did this in March. We had 12 straight like negative tech days in March, or 11 out of 12. Finally, we saw one green day and we were all green. All right. The same thing happened in May, right? There was a week in May where everything got beat up. Now, I wish I'd prepared and just said, let's buy puts on everything, but I did not. I'm always an optimist, and I'm always about securing the best entry. If I thought they would throw up on itself, I would have been like, puts, let's just go in all in. All right, so Delta Airlines, right? It could rebound. I thought it was going to be stronger around July 4th, which is this week. I thought the Dow would start to return because everything was opening up and stuff like that, but it hasn't happened yet because the 10-year and inflation is so low. So we'll see what the Fed says tomorrow. If the Fed comes out with like some type of inflation stuff, I think they're talking Wednesday afternoon. What could happen is a quick reversal, meaning if tech's doing well tomorrow, it could sell off. And if the Dow's doing shitty tomorrow, it could easily reverse depending on the Fed's words. So I'd be careful. Again, we're looking for the lowest point. Even when you average down, you don't want to just go by the mathematics going, I'm down 40%. Let me buy some more Delta options. No, if Delta looks like it's going to go down 3% today instead of 2%, and you could save another 10% on your options, then let your options drop to 50%. Then you average down. We're looking for the best entry point. You're always looking for the best entry point and keep your average down the lowest. And it's all about percentage gain. It's not about dollar amount. Someone said, yeah, I look to make $1,000 a day. No. You look to make max return on each of your investments. If your investment, you want this to be profitable, it would be great to have $1,000, but I'll take 5%. I'll take 100% as long as my trades are profitable over and over again. That's what I try not to have. Losing trades. People ask me, what do you do? When do you exit out of a losing trade? Well, it's tough because I average down and then I buy out. And then if it spikes, I sell this and this one's profitable. And I show it all on my platform, on my spreadsheet. And I have my stocks. And again, 4 new positions today. I shared them earlier in the live stream. Let's get to another question, please. Yeah, so Delta stuff. I still love Delta. I doubled my shares of Carnival at 2,500 shares. Okay, you could do a covered call. Or here's the thing. You have $2,500 of Carnival. This is episode 14. So you sell it at $25, right? Now you have $2,500. You take half of that, $1,250. You buy strike price of $25, Carnival, October options. And you know what? For this example, since I'm helping out, I'm going to tell you exactly what to do. And you'll see if you like it. But this is episode 14 in a nutshell. So when you go to Carnival options, we're going to go out to October, which is 101 days. The $25 options are $2.50, okay? So this is perfect. You sell it. You have $2,500, all right? You keep half the money on the side. You spend $1,250 on those October options, $1,250, and they're $250 each. You get 5 contracts, okay? The good news is Carnival goes up to at least $30. I think Carnival is going to be $50 come October. But let's just say it goes up to $30, okay? If you had stock, you'd make $500, okay? If you have options, you just made $1,250. Right? So you just made more money, $1,250 if you spend half your money on options. So here's what I do again. Sell 100 shares for $25, use half that money, and buy October options, call, strike 25. If it goes to 30, you're making 2 times your money that you would have had in stock. If it goes to 35, you're making even more than you would have had in stock. And if it goes to 55, you're going to crush it because each one of your contracts that you're buying at 25, when the stock is, let's say it's $50, you're going to get $2,500. You're going to get 10 to 1 on your money. That would be like Carnival going to $250. That's not going to happen. But the stock could go to $50 and you could return 1,000%. So yeah, you might want to consider that. Episode 14, if you watch it, I tell you how to get out of stock and into a longer term safe options. Options aren't dangerous. Options are dangerous if you go out of the money, break the rule, buy early in the day before 10:30 when the market settles, and don't give yourself enough time for you to be right. Say you buy Friday's options and you're wrong tomorrow. Great. Wednesday's out of the question. That only leaves you Thursday. And if you're a puss, then you're probably going to sell Thursday because you don't have the heart to wait out Friday. All right. So that's a consideration. Episode 14, please. Matt, I think I want to know what to do with Tiger. How do you feel about those $30 calls? I hate those $30 calls. I mean, I'm going to lie to you. I just said earlier, I hate the $30 calls. I broke the rule. I bought it when the stock was like 26 and change or 27 and change. And I was like, yeah, it's going to bounce 10 or 11%. Then China threw up on itself, and instead of bouncing, it threw up 2 days in a row and lost like, 20%, some shit like that. So yeah, the $30 options, unfortunately, I don't think they're going to be worth much. Now, here's why I'm keeping them. Because if China straightens itself out, right, then Tiger's going to pop like 15% in one day. It's going to go up like $3, $4. So right now, for me selling those options, it's all risk versus reward. So I'm not holding on to them until they become zero. If they go down to like almost crap, yeah, I'll sell them for like 8-10 cents. However, right now, whatever I can get for them, I'm thinking I can get 4 or 5 times that if I'm right. And if there's a pop, you look at Futu again. Futu was down to like 139, popped $8 more, so now it's 147. It still had a tough day, down 8%. But why isn't it at the bottom like Tiger is? They run together. So yeah, those are tough. If you want to average down, here's what I would do. In or at the money. I like the $20 ones I mentioned earlier. If you go to the same strike date, expiration date, July 16th. If not, all right, if they're too expensive for you, right, and you want to go out, I think they're $2.80 or something to that extent. If they're too expensive, then I would say go out to August or September, and you could buy some $25 strikes or $27 strikes, because I do think Tiger is going to rebound. I do think Tiger will be somewhere between $40 and $50 by the end of the year, if not sooner. All right, next question. So again, episode 37 tells you, all right, you have 10 contracts in XL. Yeah, so I mean, again, XL bothers me so much. I wish it was like CCIV or even like Fisker or something like that. I just thought demand was in XL, then it disappeared. Then we averaged down. You have no money left. Yeah, I'm stupid. What do you think it'd go up by then? So I'm going to look at XL real quick for you. Again, volume's been so light, and I think they had – they probably had inflow today. And XL showed you today when it was like $8 and like 10 cents that it is willing to go up. But again, volume was 2 million. I think they usually do 8 million. Yeah, they usually do 7.5 million, and the volume was 2 million, and XL opened up like it was $8.08. So yeah, but let's look at the 1 month. I mean, there needs to be volume. Volume's so dead on XL. Now, the last time it was around this price, it went 3 straight inflow days and popped almost to $9, or it did make it to $9. So don't be surprised if the market seems to reverse and the the EV sector is reversing with like Workhorse and a couple of the other companies I mentioned, Lee, Neo. Because remember, Neo dropped 10%. My exit price on Neo was $55. Guess what happened last week? I didn't put in the order. So it went from 55 down to 50. Remember, I went into it at $33. So I was making 66%. That's why we set price targets. Same with EH. So I mentioned I feel your pain. EH last week went over $44 and like 18 cents. That was my exit price. I didn't catch it that day because I was pointing something out. I didn't have my order set in. So now it's down, like $7 since then. Okay. What else? I mentioned NNOX, that I really like NNOX and Apple. I mentioned that the other day. I bought some January calls for both stocks. Both stocks look good today. I think Apple's going to be $180, not next week, but soon. And I think NNOX, it just looks strong. When there's a volume spike again, I think it'll be strong. So let's look at XL. Yeah, I mean, you're looking for volume. Unfortunately, there are definitely bears in the market these days because the people think market is overrated. So for any stock, you could see a bear step in. Now, the thing is, some bears aren't too smart. I know how to manipulate a stock. Some of these guys don't, and I see them, and they shoot their load too soon. They put up their wall too soon. They don't put up their wall the right way. It gets eaten up. They're getting crushed. They'll end up buying back, and the stock will go even higher. All right, next question, please. All right, last 3 trades for me have been super red. Yeah, unfortunately. Yeah, so it all started with the NTLA puts. But yeah, you sold yours for profit. So again, you're holding. That's great. Yeah, I mean, Russ is definitely improving. So every day, I make comments about Russ, and you guys can watch any episode. I'm like, Russ, max profit. Russ, you sold too soon. Russ made some comments today where he got in at the right price because he put his bid in so low, it got hit, where he was almost automatically profitable as soon as it happened. Then he got some max value on some, so he made a profit. Again, it's better to make profit and repeat rather than holding the bag, riding the elevator up, and writing it down. I'd rather you guys step and repeat, okay? And yes, there are some trolls on Webull and maybe some other platforms, and I don't make every call perfect, but I'm transparent as hell. And even when I'm wrong, I'll just blame China because that's whose fault it is. China. Next question, please. Always blame China. See, everybody else support that, right? All right, do I think edit will continue to go down? That's a good question. Edit's going to run again. It's going to run concurrently with the 2 other gene editing companies. So Edit took a beating today of 12%. It's been outflow 4 out of 6 days ever since they got some volume, even though it went up. So yeah, I mean, the odds are that Edit will probably go down tomorrow. However, if it goes up, it could easily spike hard on an inflow day, right? That stock might spike, 10%. The other 2 gene editing companies will move with it. Again, NTLA, it looks similar. I didn't read the news. I don't know if they closed their offering of $145 a share. I don't see it, but it says hedge funds are cashing out 5 hours ago. Again, remember I said the stock was going to go down last week, and I couldn't believe it spiked to 200, and I was just so confused, and I said market manipulation, institutional ownership at like 90%. I couldn't control that. I don't think Edit has the same. So you might want to look up if institutions own Edit. If it's more like retail traders, then yes, Edit can continue to go down. All right, next question, please. Good question, Justin. All right. Things you do. Would I look at? Oh yeah, I remember this one. This was that space stock, right? That everybody was following space, and then was like, hey, well, this one, and I think it was a SPAC as well, right? ASTR. And if that is the case, if it is a SPAC, I will not get involved, and I wouldn't tell you. Yeah, this one's definitely a SPAC. How do I know? Because I go to the 1-year chart. And it basically was running around $10, which is what SPACs basically come in at. Then it went as high as $21, and then it looks like it's making a U, and it actually just dropped off 20% today. So if it follows the pattern, it could actually go up. However, I don't think the space industry is so great. I mean, I thought it was really cool, and I know it's a huge accomplishment, but you're paying $250,000 to ride up in 0 gravity for about 4 minutes, okay? Now, I like money, and I like $250,000, and I don't think I would do it. Now, what happens if Jeff Bezos or Richard Branson blow up in space, okay? What happens? I know not really Amazon stock, but all these other companies, man, they would go down so hard. So risk versus reward. You do understand a bunch of SpaceX and these other test flights have exploded, okay? So I don't care if it's 5% or 4%. That's still 1 out of every 25 or something ridiculous like that. Yeah, I get they're going to be testing. I wouldn't want to have my money in a space program when one of these guys take off. Now, granted, retail traders will love that shit. Space takes off. Okay, so let me just tell you the chart. Let me look at the 3-month chart. I don't want to get excited. So, yeah, I mean, of course, there's a ton of volume as soon as space got interesting, which was like July 1st. So as soon as July 1st came away, the stock went from $12 all the way to $15, probably hit as high as $17. It was as high as $16 today. It sold off. It's back in the $12 range. It's going to consolidate. So when it stops selling off, then yes, you can re-enter, okay? But if it sells off, it could literally go back down to like $10 or $11, which would be another 10%, all right? I'm not saying that's going to happen. It could easily pop tomorrow too. But for me, it's risk versus reward. And right now, if I had to flip a coin, I don't know. So if I don't know, I'd rather save my money on the side. You get it. When I get excited about a company, like again, I mentioned I have no position in this one in case you missed it earlier, but I was talking to a Lifetime member and he said his friend really likes the company. I looked at the chart and it looks sick. Look at the 1-month chart. MITK. I have no position, but don't be surprised if I alert a position tomorrow, whether it's options or stock. It looks good. Simple as that. Okay, let's get to another question, please. So long-term hold, I don't know what the company does. Hey, Matt, what do I think about Nano and DDD? Seems to follow. Yes, so Nano Dimensions did the same thing today. It sold off, and then it turned green, and then it struggled, but I don't know if it finished green. It might have finished, down a few cents? If finished down, 10 cents, which is 1.3%. So don't take it lightly. It's 10 cents, which is, to me, not that much because it trades in a range of 50 cents. So it finished down 10 cents. It trades in a rate of 50. So yeah, I like Nano Dimensions. Again, it sold off for like 7 out of 8 days. So to me, that's consolidating as well. I would rather be in DDD because it has institutional ownership. It has institutional investors. It has big block trades, whereas the other two I mentioned in the earlier part of the live stream do not. And let me see if this one does any large trades. No, they haven't had any large scale orders since 5 days ago on June 29th, where it was outflow. So right now you're relying on retail traders. So you're relying on a strong tech market. If you want NNDM to go up tomorrow and to go up good, you need tech to be strong, which means you need 10-year to be somewhat weak. You need inflation to be here. Now, again, I don't think any of the market's going to go crazy tomorrow. It might sell off again. Why? Because the Fed's probably not talking at 2 or 2:30, and everybody wants to hear and hear that the Fed's saying the same thing. All right, next question, please, or comment. All right, DISN is pretty beat up. Is that like Discovery Networks? Is that what that is? If it is, let's see first. Disney, like Disney, DIS? I'm going to assume you mean Disney because that's the only thing that comes up. Long-term call, September, October. Yeah, I mean, we all love Disney. Who doesn't love Disney? And if you're looking at Disney right now, okay, it's looking to do the M. So it's probably actually going to flip around, and you could probably at least get 178 out of it, which would be a $5 move to the upside, which would be like 3 or 4%. So if you're entering to options, that would be like a 40% move. So yes, Mr. Bacon, I happen to like Disney, okay? But if the Dow gets beat up tomorrow, understand people consider the Dow airlines, cruise ships, casino, Disney, all right? Probably gas and oil companies, right? Energy, probably banking companies, Bank of America, JP Morgan, things like that. So I'd be weary, okay? More people are investing in tech. And again, if tech is strong, more chance the Dow would be weak. So yes, I like Disney long-term. If you're going to enter into it, go with one contract, see where you end up in a day. Then buy 2 more. Make sure you found the bottom. It's always good to make sure you call the best entry. All right, next question, please. All right, MRO. Don't know MRO. Oh, is that like the oil company, right? Or maybe not. Let me see. Yeah, Marathon Oil. Okay, so Marathon Oil, again, is oil prices are going down. I mentioned Kathy Wood talked about deflation and that oil prices. She thinks, okay, I think oil prices are in the $70 range per barrel. She thinks that they're going to go down to $17 per barrel. She thinks it's going to be green energy all the way. Now, I guess, or it's granted that she goes out a few years, okay? But yeah, I mean, this actually company is struggling, even though it went up from $12 to $13.21 where it is now. The outflow days outnumber the inflow days. 1, 2, 3, 4, 5, 6, 7. All right, so in the last month, there's probably been about 17 outflow days and 7 inflow days. So just think if you're playing a sports game, you have 7 wins and 17 losses. It's depressing, okay? You're batting at like 35%. It sucks. So no, although this chart could easily flip, say oil flips, you can easily get like 50, 80 cents out of it. You could probably make 5%, but your timing has to be right. Does it go lower with the Dow or does oil flip? So you can watch oil. If you like oil and it flips and you get a good entry, you can make a swing trade out of it and definitely claim like 5%. But if it goes 5% lower, then you know you have a good entry. All right, next question, please. By the way, if you want to join the community, now it is my platform, but it's the community. We're building a community. So even days like today where people are beat up and like, F this, F that, other people say, no, follow the rules. Here, let me help you. Let me help you do this. So it's $3.49 a week. Now, why do I charge $3.49 a week? Why? Anybody to retire rich? No, because I want everybody to be able to afford to join, right? You can afford to read my rules on the website. You can afford to follow the platform. If you don't like it in a week, that's fine. It's not for you. If you're a newer trader and you don't understand options or you like things explained or you like a community environment, then this is probably for you. No, it's not Discord. I don't let people just chat. And no, I'm not one of those gurus that says, buy this, and then I disappear. I'm trying to educate. I'm trying to share all throughout the days. And when I make mistakes, I share. Again, I wish I'd held on to different trades today and sold the other trades. Sold DDD for profit and bought in when it dropped and held on to Edit till it dropped the most. I would have crushed it. All right, my lunch is about to be over. But back at home, what do you think about RMO? So I know, okay, sorry. I didn't know your lunch was almost over, man. So Romeo, again, energy stock. I would rather be in Canadian Solar or something like that. Romeo's been beat up. They definitely need a catalyst. Remember, we sold off, what was $10 flat, I think it was. Yeah, unfortunately, I don't have good news for Romeo, and I know I have 100 shares on my spreadsheet. I have not averaged down on it, and nor will I. There's 6 straight heavy selling days. Again, Romeo is probably going to follow the Dow. So if you're looking for an energy play or a green energy play, I like Canadian Solar. I don't like First Solar anymore because Jim Cramer likes First Solar, and he's a turd. Next question. Yes, so unfortunately, Romeo doesn't look great. Do I think UVXY will go to 30 soon? So UVXY, when it has inflow days, all right? So when it goes up and it has inflow days and people are buying into the UVXY, meaning market uncertainty, okay? It usually happens 2 or 3 days in a row. So I think we've actually seen that. So I was actually looking for the UVXY to spike to 30 so I can buy some puts. It didn't happen. I don't think the UVXY is going to spike. When it was at, 28.80, I almost alerted that it was time for puts today, and I did not because I thought it could spike. And I still think it could spike tomorrow. So it had 2 straight inflow days. It could definitely have a 3rd straight inflow day. But again, it spiked to 29.29. That was pretty high, but it wasn't high enough for me to get involved. So if it spikes to 29.50, 29.41, then yeah, I'd probably get involved with some puts, and I might even buy the ones that expire Friday. If it spikes tomorrow, I will buy puts that expire Friday, and I'll also go out to next week, the 16th. Again, if you're following me, I would never tell you to buy puts or any contract that expire in 2 or 3 days. Always buy out more time. So when you say, Matt, you did it, I don't care. Matt does what Matt wants. 1% of my 1% of my portfolio is in options. 1%. If you're trading 100% or even 30%, or you're trading real money that matters to you, okay? I don't want you to take the risks that I take. If I trade an option that's 2 or 3 days out, you trade one that's like a month out. So you don't make 100%. You'll make 40 or 50 if it goes up. But if it goes down, you're not going to lose 90%. And if it goes down and then rebounds, you'll be even, and I'm losing 90%. That's why my options are riskier. All right, next question. Yes, anytime the UVXY spikes, I like. Okay, I helped Nicola puts till the day they're expiring. Instead of just breaking even or losing a bit, you gain 40%. Patience is what you're learning. Yes, Russ. So I teach Russ and every other member. It's about ringing up the sale. So when we get the best entry, whatever you buy, I bought something for $2, let's say. You're going to ask right away, turn it around and ask for $3. It's like if you bought a house for $1 million and someone wants to offer you $1.5 million the next day, you're not going to say no. So if somebody is dumb enough, a computer, an algorithm is dumb enough to give you 50% profit. Or in this case, when I bought Edit today, 100% profit. I'll take it. If I known they were going to give me 250% profit, I would have done it. But good, Russ. Russ is definitely learning. I will keep complimenting you every day. All right, next question, please. Otherwise, you can ask yes, you can ask. There are so many places you can ask for help. Thank you for pointing that out. All right, next question. I see a question on the side here. Oh, eBay. Okay, so I entered into eBay today. Yes, transparency trade, not an alert. Again, I want my alerts to be 100%, which means guaranteed. No, eBay for me was more risky. It was $69 and like 5 cents or 4 cents. I think it's going to go to $71 by Friday. I think tech 4-letter stocks are still going to be stronger than the Dow stocks. So as long as inflation stays down and 4-letter stocks are stronger, I think eBay chart looks great. I think the only thing we might have saw today was a little sell-off, which is consolidation. So yeah, eBay hits $71 by Friday. Boom. I'm looking for 100% return. That's what I look for. Risk versus reward. So my risk on the downside, in my estimation, was about 33, 34%. On the upside, I'm looking for 100%. So my ratio is 3 to 1. All right. My rewards outweigh my risk 3 to 1. I see a question on the side that I'm just going to answer because it's lit up green. And I think that means they paid money to get that. So LTR. Yeah, there it is. LTR. Okay. So let's look at the chart right here. I'm not sure what they are. I know volume is extremely light, 145,000, which is telling me, as I guessed, low float. So you're involved with a low float, low volume stock. Which means it has probably a low book value. Now, what happens is it spiked all the way to $5.93 in May. Since then, it had one other good trading volume day where it spiked to $5.50. It looks like the chart could be turning around. However, it hasn't had 3 straight inflow days in a long time. So if you're watching LTRX, now it's not on my watch list, but if you're watching it, if it has a green day tomorrow, that's an extremely good sign. Okay? I think that's you, James. If it's a green day tomorrow, it's a very good sign because it only has 2 inflow days in a row dating all the way back to May 28th. So again, it's a pattern. After 2 inflow days, there's an outflow day. If you get 3 in a row, that's a good sign. Now I'm going to look up Sunrun. because I don't know Sunrun, but I think it's like Sun. Hopefully it's here. Up Sunrun. So it's RUN. Okay. So yeah, volume spiked. Let's see when volume spiked. Around June 16th, which I think is when Biden spoke about his infrastructure bill. So it's had a couple of good days. And then June 21st, it had an outflow day, followed by the next day where it was consolidating. Then it had 2 more good days. So it's had a good night spike again. Then it consolidated, spiked again. Right now it looks like it's consolidating. So if you have RUN, RUN, here's what you're looking for. Volume. It did 4 million shares today, okay? If you look back to June 25th, it looks like it did 8 times that. So I'm going to guess it probably did 34 million that day, 34 to 35 million. So if your stock has inflow and it does anything close to that, let's say 16 million, it did 4 million today. Let's say 16 million, okay? Yes, your stock will likely spike, and I'll give you a percentage, 53 to 56, $3. So what is that, about 7 or 8%? So yes, if these energy stocks have a run, and in fact, I'm going to add this to my watch list, not because I like the chart, but because I just want to see if I'm right. All right, next question, please. All right, thoughts on ARK's ETF. I don't like ETFs, and Kathy Wood, understand her thinking is longer term. She's talking about oil making its way to $17 a barrel, and that she believes in electric vehicles and green energy, and she's going to be right, but she might be right 6 years from now. She might be right 3 years from now, and you and me, Steve, we're looking for instant gratification. We're looking for Matt to say snap, and then snap happens. To say blue, and then blue turns out, you know? It's like watching roulette, red or black. Green, you know, whatever it is. Red 17, boom, red 17, we win. Or black 17, I guess it would be. I don't even know which one is which. I don't like ETFs. I don't like Kathy Wood's ARK. Sorry, Kathy. Next question. I like individual stocks. If you want to look at individual stocks in different ETFs that she has, whether it's the space one or this or that, always look for best in class. All right, super. What'd you do? You made some money on Uvxy calls today. Yes, but you're waiting on puts. So I don't know if you bought calls and puts, but yes, I know some people in my platform, and I think maybe might have been 9 to 15 people bought calls today and did extremely well. Now, again, when they buy calls, they're looking for the market to throw up on itself. They're looking for, craziness in the market. And I get it can happen. I don't like that. It's the same way I call the bottoms in stocks instead of calling the top and going, oh, this stock's going to come down hard. Because I don't know. I just have this fear, this weird fear, like what's happened with NTLA when I said, okay, I'm calling the top, and then it spiked to 200. It went up like 50%. So I don't know. Is that just my luck? Anyway, yeah. So yeah, puts will print, no doubt. They would have printed from 28.80 all the way down to 28.12 today. But for me, that's not a major move. I guess 70 cents for the Uvxy is good, but I'm looking for like 12% move. I mean, like 100% return. All right, next question, please. All right, just because you see someone else break the rules. Oh, yes. So I break every freaking rule, and I tell you about it. I mentioned 2 Fridays ago. This is how dumb I am. And I don't mind being transparent in a good way, okay? I went on pre-market 2 Fridays ago, and I said, anything with 4 letters is going to get crushed today. The Nasdaq's getting beat down. And then I tweeted pre-market, I'm going to buy some plug options. So instead of listening to myself, and then at 9:30, I bought them on sale, 50% off, right? And I thought I was so good. I was like, yeah, Matt. Then I bought more at 9:39 because I was already down 40%. Then I bought more at 9:59. By the time 10:19 rolled around, I was down $6,500 to $7,000. Now, the good news about plug is I was right that following Monday and Tuesday, which would have been last week, I crushed it. And then on Tuesday, I said, we're looking for a 5% gain, and went up 5%, and we sold and we made money. The point was, if I was smart and I said, tech's getting hurt, I would have waited. So when I tell you the Dow's getting hurt and you want to average down on Dow stocks, whether it be STX or Delta or Carnival or whatever, yes, but you want to wait for the lowest point. So yeah, breaking the rules means you're buying an option before 10:30 a.m. I think I made that video. I think it's episode 47. I spoke about why we wait until 10:30. So if you're newer to trading, you don't understand why we wait until 10:30 when the spreads between the bid and the ask narrow, okay? So that way, you got to watch episode 47. All right, thank you, love. Next question, comment. All right, Mara, decent DT. If anyone grabs some calls. All right, so let's see what Mara did today. Again, Mara is going to follow Bitcoin for the most part. Now, Mara farms Bitcoin. Now, volume's been low for the past, 3 straight days. There's been some sell-off, so I guess Bitcoin's been struggling, which we all know it reached 35, and then it sold off, and it's probably back at 33, 900 right now? No, I think it's probably 34. Let's see what it's at. 33,900. Okay, so I'm pretty damn accurate. That's why you make guesses, because every time I look at my phone, I guess where my stocks or where Bitcoin is or where Ethereum is. And the closer I am, the more in tune I am with it. Okay, so Mary, you're really looking for a good Bitcoin move. If I was going to be in a Bitcoin option, I'd rather be in MicroStrategy. MSTR, which is like the Fort Knox of Bitcoin. I don't own any options. But yeah, Mara will be right close behind it. Riot will be close behind it. The stocks that'll struggle more are the smaller name stocks, the SOS, FTFT, etc. All right, next question, please. It's not a bad thing because you're limiting your downside. If you think Bitcoin's going to like 29,000 or some people say 20,000 again, then you have a lot of downside. But if you're like, yeah, Bitcoin's holding 33,000 level good, then you're like, all right, my upside could be like, let's say it spikes to 36 or 37,000. If that happens and goes up 10%, your Mara options will go up literally probably 120%. So yeah, it could happen like that. So you're looking for an overnight spike. All right, thoughts on Uvxy for the week. Did I take another position? So I bought one put option today. I am profitable because I bought it at like 28, what was it, 57 or something like that. And I think Uvxy ended. I wanted to buy more. But again, I have to see inflow versus outflow tomorrow. I have to see what the Fed says. I have to see where the futures are. So the Dow, right? It went down 358 and then it bounced back to like 220. So it could easily bounce back the extra 120 tomorrow, meaning green 120, or it could throw up and give back the 150 that it stole today. So meaning it would go back to like 358, which means 150 points. So tomorrow I see the Dow going either way. Now tech is strong. I mean, you see all these politicians, Amazon, Netflix. Remember Netflix was like 498. I said Netflix is good. When it passes 500, then you know tech is strong. Where's Netflix? 547, something like that. Yeah, so I took one position. I like a bigger spike. If it spiked to 29.50, I would have been all in. All right, next question, please. All right, Vox. Let's check it out for you, bro. All right, I'm still in my crypto account, so let's get out of that. All right, VOXX. So please, if you're watching still right now, please hit the like button, okay? Everything's analytics. If you're watching, please share this with some people. This is all we do. Everything's organic. So, all right, Vox. No, it looks terrible. What is it? Vox International is the actual company. I thought it was like an ETF. It looks terrible. It's been sold off 5 straight days. Even when they were buying for 5 straight days, it doesn't look like it moved hell of a lot, which means I either think it has too low a volume. Yeah, so it only has 23 million shares outstanding, and the average volume is 158,000 or 180,000. Market cap is 321 million. So really, it's what I would consider a penny stock, even though it sells for $13. If somebody talks about it, if they have any type of catalyst and people want to buy this, the shares outstanding are so low that, yes, it can push the stock up. All right, let's get one more question, and then we'll call it a wrap. All right, Ellie, you received over 1,000% on your reach. Thank you, Matt. After our 101, yes, you've been much smarter. Thank you. All right, awesome. Listen, I thank everybody from the family. If you don't know about my platform, it's $3.49. If you don't want to be part of it, watch the other videos. Educate yourself. If you like it, come back to me. Like my videos. Thank you, everybody. Have a good night.